Good evening, everybody. How are we all doing? Tuesday, the 3rd of September, and apparently we're going to rename it REKTEMBER or REDtember, whatever it is. We're going to talk about it tonight, whether or not September is a bad month for Bitcoin, and if it is, what that actually means for us. Hope you're all doing well. Hope you're good. Hello to everyone in the chat. I actually see Tim's with us. Tim is back from his holidays. Hope you had a good time. I'm ready to get back into it. We're going to jump straight in, really. Only a little bit of news. Want to spend some time talking about REKTEMBER, past Septembers, how they've fared compared to where we are at the moment. Thanks, Chris. Loud and clear. Like to hear that. We'll have a look at where Bitcoin is. We'll have a look at Bitcoin dominance. We'll have a look at the altcoin market. We'll have a look at where I'm looking to make moves and trades and things like that, and generally where we see things going. So a bit to get through, but hopefully not too long. And let's just run straight in. Okay, so usual charts we see at the moment. Bitcoin, I mean, on the weekly time frame, obviously got 5 days left on this candle, but we're still in that, I don't know what you want to call it, the flag part of a bull flag, expanding megaphone formation, whatever it is that you want to call it, we are still doing that. But the only thing that we've said time upon time for the last 16 months, sorry, 6 months, not 16, lower high, lower low, lower high, lower low. So downtrend still, absolutely, still within a bullish formation, but we're just waiting for that break to north. So on a weekly time frame, okay, not in the worst place we've been over the last couple of months. Not particularly in the best, but it is a setup for what we're expecting to be much better going into Q4 of this year and then into 2025. Have a look at some of the other ones. Now, Casper, I'll move that onto the larger screen so you can see it. So my face is in the way. Casper's been one of the ones we've always talked about bucking the trend and being particularly bullish. But what I would say with Casper right now, along with a lot of altcoins, it is starting to show some element of weakness. Now, weakness for Casper is normally short-lived and bought up quite quickly. So again, may not see it dip out of the higher highs and higher lows. Matter of fact, for that really to happen on the weekly time frame, I'm kind of thinking it needs to close lower than 14.5 cents. We'll go into some more detail later on, but it's still got plenty of room to the downside and still maintaining that sort of upward momentum. Sorry, I should say for it to actually break the trend, it needs to get down to below 11 cents. But to stay within the support line that's been going since pretty much a year, October last year. That's where I am looking for that one. Moving on to Ethereum. Ethereum is just pitiful and ugly, and that's on any time frame. So if this is a reflection of the majority of the altcoin market, which I think is a fair assessment to make, not particularly looking very good. We don't normally throw fibs on straight away, but we might not get into Ethereum in as much detail a little bit later on. But this is currently where we're sitting at the moment. Now this is body to body. You can kind of see we are battling, but just below the 618 at the moment. And of course, that is a hell of a high test at the moment. 5 and a bit days to go. So maybe not stays that way. Really not looking too good. And what we've had is we've had that move down all the way down to sort of 2000. We've bounced back up 50% retracement. We couldn't quite hold that 50% retracement. And last week we saw it go from 2,700 all the way down to 2,400. It's kind of where we're finding ourselves at the moment. So not looking particularly good for Ethereum. It does have an ETF. We are about to get back into investors back at their desks, looking to try and make some money, etc. So maybe we see some turnaround. But when we look at ETFs, there's really not been much interest in Ethereum over the last couple of weeks since we last looked at it. And then finally, we'll just quickly touch on Tau, and we're going to spend a bit of time looking at Tau as we always do later on. But on the weekly, I'm not liking this. So 3-4 weeks ago, I was kind of wondering whether or not those head and shoulders had been negated because the right shoulder was dragging out quite a bit. The only thing that could have really stopped that opinion from happening was if that right shoulder turned into a double top, which unfortunately it actually has. And it's a double top within a double top, really, because we had this initial double top here, which is a neckline around about 280. We have lost that last week and again continuing into this week, which then could lead us back down to this sort of like 210 level. Which could then form another double top, completing the head and shoulders, making that move down. Doesn't look so good on the linear chart side. Logarithmic looks a lot better. That's when we're starting to talk about the moves down to 140, God forbid. even down as low as 100. We'll have to wait and see. But yeah, we'll dive into those ones later. But right now, chart-wise, not looking particularly good. I think that's a fair reflection on fear and greed, and also market sentiment as a whole, across social media, across Discord, across, a lot of different factors. It just doesn't seem to be much love in the markets at the moment. But, we all should know by now, these times of fear, these times of lack of interest, 9 times out of 10, we look back at those 12 months later as ideal buying opportunities. Yes, it's about trying to position yourself in the best available time. Don't be nitpicking too much. We all know about the tail line missing, watching it, tail at 160, not buying. Flew back up to 360. I could have bought and sold again. I didn't. I thought I was getting greedy. So it's that kind of stuff that we need to look out and play for. Again, hello to everybody in the chat. If you do have any questions, feel free to drop them in there. Little poll running at the moment. What's September going to do? We're ending in the green. We're ending in the red. I'm going to try and close that poll before we get on to the REKTEMBER analysis, so you can't change your mind. But let's just jump into a tiny little bit of news. The first one absolutely caught my attention because of the Toblerone. Great chocolate bar. And a weighty chocolate bar is actually used as part of the robbery. But all jokes to one side, this isn't actually really a story about a man getting robbed, losing his Bitcoin to a Toblerone. It's actually, for once, the Scottish authorities have managed to track, trace, and seize the Bitcoin that was stolen from the man that was robbed at Toblerone Point and return it to them. So, marking it the first robbery in Scotland to involve cryptocurrency tracing, not trading, tracing. So, I don't want to dive necessarily into it. I just think we talk about security, we talk about hacks, and generally it's very difficult to get your funds back if you have been hacked. And that's why we push so vehemently on security and self-preservation within that. But there are the odd cases in here in which they do. Now, it's 23.5 Bitcoin was taken. Well, at least that's been seized and given back. I can't remember exactly how much has been taken, but it's taken in 2020. That guy missed the 2021 bull run. I'm sure he probably wouldn't have got out of it at the right time. Anyway, but hopefully he's going to get the vast majority back of what he lost. As I say, I don't know if he fully lost 23 and a half or if it was more than that. But it's a hell of a lot of Bitcoin to lose, especially at the time when 2020, we're talking about, not even past $10,000 per Bitcoin there. So good to see that the Scottish authorities have a way of tracking, tracing, and returning seized Bitcoin to the victim. So long may that continue. Hopefully that rolls into the UK as well, or England, should I say. Next one, again, Bitcoin hash price slump echoes March 2020 BTC price launch zone. What do I necessarily mean by that? And what the hell is the Bitcoin hash price? So basically the hash price is designed to measure miner costs on a per terahash basis. So hash price is currently low because price of Bitcoin costed to mine it versus the terahash basis, if you necessarily will. But without going into the article as such, I just want to draw attention actually on this graph here, and we're going to talk about these sort of lull periods in the initial stage of bull markets a little bit later on. But Bitcoin hash price at the moment is echoing sort of this sort of like stagnant period that we saw in the 2020 bull market, the beginning of the bull market, immediately after the halving, and also end of 2016 into 2017, which again is a post-halving event leading into a bull run. Similar kind of scenario where we just see that sort of like low sort of drop down of the hash price, a prolonged sort of movement to the right before we see an explosion both in the hash price and also Bitcoin's price. So not saying that this would end tomorrow or anything like that, but we are starting to see some similarities there. And then we cross-reference that against some of the things we're going to talk about a little bit later on. Maybe actually we do have some level of optimism left within us, but we shall wait and see. Let's jump into REKTEMBER. I think that's the thing we want to talk about next. And for those of you that don't watch YouTube or not on crypto Twitter, effectively REKTEMBER is conveniently punned and renamed from red September. So historically, Bitcoin has seen September as being the reddest month over time. So dating all the way back to 2010. And generally what we see is that no matter where the markets have performed leading up to this, no matter if you're in a bull or a bear market, September typically, for some reason, always seems to stay red, leading to people speculating that although we're only 3 days into September and we do have some potentially bullish news on the horizon, that actually we could still see September being a bit of a drawdown month before we move into things like the Halloween effect, UPtober, and then springboard into the Santa Rally, etc., 2025 bull run, go on. So we're going to have a look at whether or not this happens. And I'll come back to this article here, but I tell you what, the media just loves to hype it up. I mean, this is just a handful of articles here, but one from CoinDesk talking about bearish September and seasonality. We've got the bearish September in this report, what to expect in a historically bearish September again, REKTEMBER, the crypto curse, Bitcoin break the pattern this September, we'll have to wait and see. Bitcoin price near 60K, but traders still see bearish September. And to be honest with you, content creators are exactly the same, because you scroll through crypto at the moment and, you know, it's all related on all, well, I say all, a decent amount of it is talking about REKTEMBER and bearish Septembers, etc. So what I would say is, are we just trying to live into our self-fulfilling prophecy? We know that crypto is very susceptible to market sentiment, and at the moment, what is being pushed out with market sentiment is a very dark picture in terms of the month of September. And if we take it back to what we were talking about a couple of weeks ago with market makers, you know, you've got to ask the question of, well, if everybody is talking about it's going to be a red September, what's the most likely thing to happen from a market maker point of view? They're going to play on that, potentially move the price in one direction before taking advantage and moving it in another. And again, without having to go over how market makers do it, but if the price is going down, they're buying. They just sell when the price goes up. So it may well be that they are pushing this narrative so they can start filling their bags through the month of September, ready to take us into that springboard in October. So just bear that in mind as we start talking about some of these things going forward. Thanks for everyone that has voted. Kind of 50-50 at the moment, 16 votes at generally tipping towards red at 56%, but green at 44%. I'll give it a little bit longer to see what people are saying. But let's just go back to that original article. So classic REKTEMBER, 5 things to know about Bitcoin this week. So BTC price performance starts September off in the standard way, but not every Bitcoin market take is bearish on what comes next. And we're going to try and dissect a couple of these as we go through. So Bitcoin starts September with a whimper as both the monthly and weekly close sparked the BTC price downside. And I talked about this in Discord before because, yes, yesterday, it being a Monday, we saw a decent move up, but it was a bank holiday in America. And lo and behold, 2:30 rolled on UK time today. And what happened? We went from 59,000, I think we were at one stage, down into 57,000. So, you know, now never trust a weekend pump. Roll that onto a bank holiday weekend. Assess the market from what you see, time that the actual market's open. And unfortunately, most things are ruled by the American market. So if they're on a bank holiday, I'd wait for them to see exactly which direction we are going. But going back into the article, this month's status as a red patch for Bitcoin returns is well established, but not every forecast prepares for the worst. So let's go and have a look at some of these things. So BTC price caused August lows. So Bitcoin failed to impress around the latest monthly close, and conditions have remained tenuous. And when we look at the charts, you know, for the last sort of 4, 5, 6 weeks, even since that massive sell-off, I suppose, end of July, all we've really seen is us ranging in and around 60K. Yeah, we did get that quick move up to 64,000, which was just as quickly dropped on from. But it still seemed to be that there's quite a bit of selling pressure whenever we do dip our heads above 60K. And so, you know, we're not really starting this off with a bang. But for the most part of the past week, there's been a clear spot buy around 58, which is true. But as I say, you get above 60 and we start to hit those sells as well. We're going to have a look at the monthly returns a little bit later on, so I don't think we need to necessarily run through there. As a matter of fact, I mean, we talked about the bank holiday weekend. All aboard for Red September. So BTC ultimately came in at 8.6% lower for the month of August. And one of the things that we will talk about in a second is it's not actually just September that is a particularly red month. As a matter of fact, some people like to refer to it as more of a seasonality, it's that summer season, because the worst chunk of what you actually see is kind of last couple of weeks in August, rolling into the beginning of September, and then that taking a bit of a beating. And whilst there is some recovery towards the end of September, the losses that have been made in the early half are what leave it red as it is. So the ninth month of the year tends to produce losses in and around itself, and from CoinGlass says around about 4.5%. We'll have a look at the actual percentage in a moment. Despite this, it could just be a simple matter of time, and as history is still on the side of the bulls, and I think that is something that we will get to see in a moment. Let's have a look. This is just all going through its chart. Right, tell you what, let's leave this article because I don't think there's anything there that I'm not going to talk about at the moment. But what I would just like to say is this isn't just a Bitcoin only thing. The S&P also suffers in the month of September, which kind of goes to show that, you know, these markets are still quite correlated. It's why we need to have some understanding of the other financial markets out there. Otherwise, you're just going to be caught with your pants down. And over the last 4 years, we've actually seen September's post declines, 4.9, 9.3, 4.8, and 3.9 respectively, which, if my maths is correct, is around about 5.75% on average over the last 4 years. So we're kind of seeing around about 5.7, let's just round it up to 6% for the month of September. But, you know, generally since the pandemic, we've seen the S&P just rallying. So for the last 4 years, it has been rallying, but always seems to be a bit of a downturn. End of Q3, but into Q4. So let's have a look at this Bitcoin monthly returns. And we're just looking at September here. Let's just refresh it so that we got the right date and data for September. Looks like it was right in the first place. And we can kind of see, even by looking at it, this only goes back to 2013. So we've got what, 11, 12 data points to have a look at. And we see 3 of them are green and the remaining of those are red. Now, if we take it a little bit closer, and since I've been involved in crypto 2017, I won't include today's, or this month, should I say, but of the last 7 Septembers, 6 of them have been red. Now, the last one, last September, was actually green, so yeah, fair play to it. And we'll have a look at how that breaks down within the month. But what we did see last year, and you know, throughout the summer, particularly in August, negative sentiment. September wasn't particularly great, and then about the last 3 or 4 days, we had a bit of a move up, which just took us into the green. And then we had October, which kind of took us by surprise. And I remember doing a video sort of end of October, beginning of November about, you know, are people upset that they missed the Uptober because it happened very suddenly. Sentiment in September was still relatively low, despite posting a green. And then we got swept away in October. So I think that is something to just bear in mind. And we can have a look at how this goes on the chart. So these arrows are just representing each of the Septembers. The blue one is just because it's now. So we don't know how this one's going to close at the moment. So let's just leave it at blue. Green one there. Yep. Okay. Green candle. And that's the green one that we saw about. The remaining 6 there are red. Now, okay, I painted this one orange if you can see it. That's only because actually in 2017, it was a red candle. But 1, look at that low test. 2, it was a hell of a move up. Had that have closed, or had September been 2 or 3 days longer, that would have been a green candle. That being said, it was still red. The data's still there. But let's just have a look, because although September is a red month, generally, when you align it within the 4-year cycle, when you align it within the halvings, etc., it just generally starts to align with kickstarting movement of BTC, which ultimately then leads into altcoins rallying. So if we take away the bear markets, okay, not necessarily there, but if we go into sort of post-halving years, so we've got 2016. The September one isn't on here. It is actually green, but you can kind of see. No, you can't because my face will be in the way. So this is it here. Starts to move up. Obviously, we're getting into sort of the parabolic stage. 2017 had a pullback in there, and then a real big move. And you know, this is a logarithmic chart, so you perhaps don't see it, but we're talking about, you know, opening the beginning of the month at 4,000, and within 3 months with 5x Bitcoin. to 20k. So yeah, one little pullback, cool down, and then off we went. We've had a bear market. We then had this rally, I suppose, mid bear market rally from 3 to 14k, but then a cooling off period. Halving happens after the pandemic. And again, a nice little pullback there before that Bitcoin's huge move up. And if you remember, it took us 40 days to double the price of Bitcoin from all-time high to 40k. I think it was actually 4 weeks. I might have just made the 40-day be up. And then we continued that climb all the way up. And even after we sort of cooled off in the summer, red month in September, and we only had a month, but it was an impressive month from 43 to 69k. But that September kind of showing us that pullback before we had the final blow off top bear market. So, okay, this one's not really going to count. Then last year, after a period of, sideways action over, I was going to say over the summer, but actually really it's all the way from March through to September. It was green, and then we saw that move up. Okay, the news of the ETFs providing, sorry there, Reese, hopefully that's better. Everyone else seemed to be all right with it, but hopefully that is better for you. And then that move up that we saw all the way into March, the hype in and around the halving coming in this time, although we actually start to see that cool off. And so the question really is, one, will it end red? And if it does end red, is that necessarily a bad thing? Or is it going to be, because of the way it's positioned within the 4-year cycle, because of where it is post a halving event, that actually this is, again, one of the last main opportunities of a pullback before you start to see a sharp move up. And, we're going to break this down a little bit further, so don't worry about it. But just given historically where we've seen it, and given how positive the month of October generally is, and again, one of the strongest, if not the strongest, it's a fight between October and February, although November is doing quite well as well. But October is a very strong month typically for Bitcoin. Are we then going to see that move up? Timing it in with elections, rate cuts, which we'll talk about briefly in a moment, and everything else. Maybe this is going to actually present itself as REKTEMBER, but actually we'll look back on that as the last real buying opportunity before we start to make that move going forward. Now, I do just want to throw up, this is into the Cryptoverse, their monthly returns. So this is Ben Cohen's stuff. Why am I using this one? Well, actually, his data goes all the way back to 2010, whereas the one from CoinGlass only goes to 2013. So this is going to give us a bit more of an accurate picture of how well Bitcoin has performed. And when we look at the month of September, again, we're looking at around about 6% on average with our drop, but we've still got, green month last year, and then 6 in a row without, and then we've had a couple. But what is interesting is, on average across all of the months, using the data taken back from 2010, the only 2 red months that we get are August and September. And actually, when you start, I won't do it for all of them, but when you start to change, every time I change this average calculation start date, it's just recalculating all of these down here. But the one thing you have in common is, no matter when you start the year, while some other reds appear elsewhere and disappear, September, throughout every single one, with the exception of 2023, obviously because it was green, is a red month. So it stands to reason that history has shown September is not the best month for it. But going back to 2010, there we have it, 5.9%. Let's call it 6% for cash. Let's throw that on there, because what I would say to you is, don't necessarily have to get too caught up with it. A 6% move for us, crypto enthusiasts, that's nothing. That's nothing. We deal with 6% moves all the time. And if we have a look at where the month opened, which was roughly 59,100, a 6% move would take us down to 55,500. Now, of course, the September move that you see there, that 6% is just based on the difference between the open and the close. We can wick well between either side of that. So, but what I'm talking about is, even if we go with the average of 6%, where are we going to likely find ourselves in 28 days' time on the 1st of October? Generally in and around 55k, which is only 3,000 away from where we currently sit at the moment. So we're not, well, if we're just using this data, we're not talking about an absolute rip down, a complete reset of the market and a reevaluation after we find ourselves at 37,000. Nothing quite like that. I'm not saying we can't get to 37,000, but if we're just using that data, we'd have wicked back up to 55 before the end of the month. And that's what I go back to with, it's almost like a game of two halves in September. We generally do have a poor beginning of September with the price falling away. We do recover some of it. And that's, leads into the fact that it's actually, the worst month of Bitcoin in its all recorded history is just a negative 6%. Because by the time we get towards the end of September and everyone's looking into that Halloween effect, UPtober kind of movement, we are starting to make a recovery. So the window of opportunity, if you're just going to go on this data, is very limited. And this is not the kind of thing where you are wanting to just, I'll wait and see if we get one more move back down. Now is the time that if you are on the sidelines, I suggest, and this is something that you believe in, and you think that we might see some sort of UPtober effect, that you want to be trying to find an ideal entry point between now and let's say 2 or 3 weeks to reposition yourself back in the market. We already had one bite of the cherry at end of July. You may not get another bite of the cherry. So I personally, and although we will break this down a little bit further in a moment, I'm actually looking for an opportunity to re-enter the market with however this next move goes down. And so be if it goes down further in October and November, I will reassess based on that information. But at the moment, I'm sticking with selling may go away. We saw that fall over the summer. September comes back. We see a move back into it, UPtober effect, Halloween effect, Santa Rally, 2025 bull run, money printer turn back on. Get onto those in a moment. But I think this is just to try and emphasize just how small that move potentially may be. And I get it, there's wicks. This is the monthly chart here, but hopefully you can see that. Right, well, let's just have a look at Bitcoin as we've done with some other things. We'll break it down to lower time frames. We'll talk about some other patterns that I've necessarily seen. But this is the one that I update every month. The main change that I've done here is I've actually changed the fibs. So previously I ran the fibs from January up to March, and then we saw how it was retracing. But that's January's 9 months ago now. I think what I'm going to do is I'm actually going to take it, well, I have taken it from the all-time high. I pulled it down to the low that we saw beginning of August, and I'm just having a look at how those patterns have played out. And what we've seen over the last few weeks through August and that is there has been some level of uniformity, I suppose, within that. I accept they're not perfectly lined up. And if I did it, the reason I'm doing wick to wick is if I do body to body, I think this wick is so long that it deserves to be played. But you can argue if I did pull it back here, it's actually a lot cleaner. A lot of these lines play a lot better, particularly the 618 in which we rejected and turned around from. And currently where we're having that battleground at the moment, the 236 and the 382. So, body to body, which I usually do, has that kind of play, but I just want to give myself a little bit more room to do it. So excuse me if I sort of fiddle around with this as we talk about each individual pattern, but where we currently find it wick to wick, we are battling that 382 level, around about 57,700. And yes, okay, 2 days ago we closed below it. It was a weekend, so we're not really too sure what happened. We immediately recovered it. I do if we're going to go lower, I do want to see us close below that level and remain below it, not just recover it the next day. But we can actually see over the last 2 weeks that this has been a pretty strong support level. Okay, we might have wicked below, but generally we found energy to bounce off that. And so there's still, some form of positivity that actually, maybe we have seen the worst of this. We are going to find some room to bounce with up. Now, I've got to be honest with you, 63, 64,000, depending on you're doing body to body, wick to wick, strong resistance right now, psychologically, but also from the fib that we can see there. So looking at where we can sort of try and extrapolate some targets just based off the fib levels. For me, the yellow boxes are just high blocks. These two smaller ones here are just starting to build up. So these have come about since this fall down here. Naturally, we're starting to see a lot of longs with liquidation levels just below the body close from the 5th and 4th of August. So sort of like that 53 to 52,000 level. And then likewise at the top, the shorts, which have been taken from people sort of shorting this top at about 64. They're building at 66 to 67,000. So Midterm levels, absolutely where we're going through. In terms of sort of fib levels that can draw us towards that 54,000, the 236 level, I definitely think is one to keep an eye on. I'm going to show you some vector candles later on, but that would be an area of interest for me. If we do lose the 382, I think that might help form some sort of bullish narrative we'll talk about in a moment. But if that isn't to hold, then I do expect one of two things to happen. I expect either just a retest here of this at 50,000, but if we're going to lose that, the next two levels that we talked about back at the end of July, beginning of August, worth 46,000, shall we say, and 41,000. These two building areas of much longer long positions that have been held. There are some fibs that can come down towards that to potentially support it, but they would be the worst case scenarios of where I'd be looking. Now, what that might do for altcoins, I'm afraid to say, would be absolutely decimate any position that you're in, because that is going to cause a lot of bleeding, particularly with how strong Bitcoin dominance is at the moment. And we'll get onto that a little bit later on. But that's just how I'm currently drawing this at the moment. And I'll wait for a cleaner chart to sort of show support and resistant lines and that expanding megaphone patterns, etc. a little bit later on. What I would just like to say is I did this just as a bit of a whim, but I was actually utterly amazed. If we go back the last 65 days, and this white market is $2,000, okay? I'm not going to do it for every single one. But what I would say is the volatility, the $2,000 range volatility in Bitcoin at the moment, is not something to be sniffed at. So if you are looking for short-term trades, just have a look at how many days we have seen the price of Bitcoin move within either a $2,000 or greater than $2,000 range. Perfect ammunition for sniping as long as you can find a trading pattern to get in. But I mean, it is even today, yesterday, not quite the day before, but Friday, yep, Thursday, Wednesday, obviously Tuesday, no. Go back to the week before, we got another Friday and the Wednesday and the Tuesday. Maybe that's Sunday there, but then Friday, Thursday. You get the picture. You can sort of kind of see as we go all the way through here, there's an enormous amount. And I have counted them, taking it all the way back to the 30th of June. At my count, over the last 65 days, 47 of those days, I've seen the price of Bitcoin move by greater than $2,000 over a given 24-hour period. So for those of you that are wanting to get back into trading and just trading the volatility, there's still plenty of volatility out there, even if it does feel like for weeks we've been stuck in this band of, I mean, to be fair, the band that we've been stuck in inverted commas has been like 18 grand. So you can kind of feel why there is so much volatility there to play. What I would say is, they're short-term trades. You're not using the daily or the 12-hour for those. That's going to be on the much smaller time frames, 1 hour maybe at best, but probably even looking 30-minute, 15-minute kind of time frame. But if you're that way inclined and you are looking for it, I think there is opportunities to be made. You just need to have, obviously, a good kind of method for getting in and out of the market, whether that be using fibs, EMAs, vector candles, whatever it is. I'm just trying to sort of put your eyes towards the fact that although you might think it's a boring time within the market, because all we've done for the last 6 months is range, there's still, for those of you that are brave enough to do it, opportunities out there. One other thing that has sort of caught my attention, if you will, and again, this kind of takes into account sort of the summer low and into the September. So what do we have here? We have two charts side by side. They almost look like it's the same time frame, but it's not. The chart on the right is this year, and then the chart on the left is last year, generally over the same period. And I just kind of draw your attention to the fact that it's not exact. Okay, so don't think the movement in percentage or the amount of days is not quite there, but there's definitely some similarities in what we're seeing. We've kind of got end of April, beginning of May, some sort of double top pattern. Then we sort of see the market fall away, find some sort of low before a sharp movement up. Well, you know what? We've got some sort of double pattern here. Market fall away before some sharp move up. Then we have some ranging period here, which is echoed here. The price then falls away, which we have. And then we've got sort of two periods of sort of moving up and down. And we've kind of got that here. And the reason I say that is, again, if we are talking about seasonality, if we are talking about the fact that the markets have been rhyming for the last 7 Septembers or summers, shall we say, then this isn't out of the ordinary that we see it, but actually then what you need to do is just have a look, and hopefully you could see that. I think you could have a look at then what happens. What we then find is we build out through September, and then October we move. And so although we can't see where that is, and there's no guarantee that that's going to happen, given we've seen very similar price movements, feels different because last year we were talking about 23,000 to 32,000, whereas now we're talking about 70,000 all the way down to 50,000. If that's what we're seeing, then potentially, yes, we are just going through these motions at the moment. And all we need to do is see out the rest of this month. And then we got an opportunity to move up. And, there's no correlation whatsoever with the level of what we're moving up. But the fact of the matter is, once we beat that 70K, once we know that the bull market is back resuming itself, etc., these much higher level targets are not going to be out of our graphs. I don't want to dare to dream of where they could go. People are throwing out all sorts of crazy numbers. It doesn't necessarily matter. For me, the real background's 80K, I think, in my mind. But we've still got to beat 73,000 first. So potentially some similarity, maybe some sort of hope there. Again, we still need to beat September. And again, this was last year's September, which although it was green, look at that. We had that really red move for the first 2 weeks down. Then we saw it recover, and it was on the last couple of days that took us into the green. So, hey, might well just be the same. We'll have a look at this one here, and I'm going to talk about US interest rates a tiny little bit, but I want to kind of save that discussion for a couple of weeks' time when we, on the cusp of the FOMC announcement and whether or not we're going to see some interest rate cuts. But I just want to try and take some similarities, if you will, of we talked about last summer. So let me just get, we talked about last summer, and we talked about how that kind of rhymes a little bit there. But now let's have a look at 4-year cycles and where we've got, because we had the 2017, 2018 bear market. And then what we saw from that is we had the bear market come down, we had a sharp move upwards, and then a period of consolidation before the bull market resumed, and off we went. I get it. We had that dip down there. We all know what potentially caused that. So let's just leave that the way it is. But that's what we had. And what are we seeing right now? I appreciate this is a much bigger picture, but we've had the bear market. We've had the sharp move up, and it has been. Granted, it's taken over a longer period, but we have had that move up. What do we see now? We're seeing that level of consolidation. And so this is just something that happens time and time again. It's designed to get you frustrated, designed to get the diamond hands within you scared because you're not sure where it's going. And fear and greed is in, I think it's 26 today. It's certainly sub 30. So this is all targeted to try and shake even the unshakable. The people that have been in this market for 2 or 3 cycles, to get you bored, frustrated, scared, whatever it is, to make the wrong move. And regardless of where you see things on this much smaller time frame, if you're in it for the long haul, this shouldn't be something that's rattling your cage. Yeah, okay, you might find an opportunity to get a move out of that. Perfect. If you can do it and you can pull it off, fine. But if you haven't done anything and you're sat on the sideline, I wouldn't necessarily worry about it too much. As long as you're not overexposed yourself, I think, again, assuming that we're going to continue in the same manner with the 4-year cycle, this is just history repeating itself before we move. Now, let's just get rid of these. And as I said, I'm going to save this much more detailed analysis for 2 weeks' time, just before, because I think the FOMC is going to be announced on the 18th. Now, Chairman Powell has kind of indicated that we are going to see that cut. The question is, do we see 25 basis points? Do we see 50 basis points? Do we see more? That's going to be announced on Wednesday the 18th. Well, we do ours on a Tuesday. So Tuesday the 17th, we're going to have an opportunity to have a real good talk about interest rates and everything else. But you can put the ticker on with interest rates. I mean, it is quite interesting when you see it, because if we just have a look at the parallels to where we were in 2020 or 2019, okay, when we see the interest rates sort of fall away, what happened with price? It actually moved down. Okay. And yeah, okay. Then the pandemic happened and obviously they cut interest rates massively. But it doesn't necessarily mean, I think we've started to talk about this anyway in previous discussions, that just because interest rates drop doesn't automatically mean that it's go time. Okay. There's another factor that needs to be taken into account, and that's quantitative easing. Okay. So we've got to factor that in. I'd actually, but I'll put that on in a moment. But what we can see is the rate were cut. Now, obviously, they were cut in June. So it's not a September. We're not talking about that necessarily, but they were cut. But what we saw is price actually started to steadily head down. Okay. We're in that period at the moment where we know rate cuts are coming. All right. But it doesn't necessarily mean that we're going to have that kickstart go up there. And I appreciate that contradicts what I'm talking about with seasonality and the UPtober effect. But if we do see that rate cut start happening, bearing in mind this time, we were actually only at 2.5%. Okay. And we didn't see a real move until the money printers were turned on and we were back down to, 0.25. Now, if we need to make that move all the way back down before we see it again, that could be a hell of a lot of rate cuts. The FOMC doesn't meet every month. It's 8 times a year. And depending on how quick they are to do it, we actually may see a drawn out period of price dropping. And so, like I say, it's a 2-stage factor. And I will go into it in a lot more detail in a couple of weeks' time. But when you throw in, the Federal Reserve balance sheet, you can kind of see when they're starting to turn off and on the money. So if it's dropping down, that's quantitative tightening. And then when you see the purple line starting to go up, it's quantitative easing. The money printer is turned on. So you can kind of see, rate cut started. We started to turn on the money printer, but we really turned it on. Obviously, we had to with the pandemic. And then we start to see that reflected in the price of Bitcoin start to climb up. Then we started quantitative tightening, bear market, we went down, interest rates came up. And yes, we had this little knee-jerk reaction up there, end of February, beginning of March 2023. The historians out there, you'll know that that's when the Ukrainian war, invasion, whatever you want to call it, took place. So they'll turn the old money printers on to fund that. But right now, it's quantitative tightening, interest rates are stable. So interest rates may well drop in the next couple of weeks, but we need this second one to happen before we can really start to see it. And it's going to be how quickly that happens. Now, presidential election, a lot of promises are going to be made over the next 63 days. When whoever the new president is comes into office in the beginning of January, that's when we may see the money printers turned on. I think we'll see the money printer turned on regardless of who it is. But what we actually then may see, unfortunately, is between now and then, is interest rates coming down and that leading to the price actually falling. And if you think about it, that actually makes sense. I mean, interest rates come down, okay? That means it's going to be cheaper to borrow dollars, okay? Now, if, immediately it's cheaper, but if you're willing to wait on it, it's going to be even cheaper. So these big institutions, these market makers who are wanting to buy Bitcoin, they're going to want to buy at the price it is, or will it be better for them to be able to borrow money when it's cheaper? And if we can wait a couple of rate cuts, it's going to be even cheaper, and drive that price down so that they can then buy it cheaper. That to me would be a logical way of which the market makers would look to move that. So maybe that's going against what I talked about beforehand, but it doesn't mean that it isn't necessarily going to happen. I think it's just something we need to bear in mind and have eyes on. But I will go into a lot more detail on that in a couple of weeks' time. And hopefully I haven't lost you on that one just yet with a sort of change of opinion there. Right, let's have a look at a little bit of a lower time frame, what we can see with Bitcoin, because I think there is a pattern that's playing out here from a market maker theory, in which could suggest that actually, contrary to what I've just said, maybe we do have an opportunity for a move up. And what we can kind of see is we've had this move up here. We've had some form of M formation, double top, whatever you want to see. We've had a sharp move back down, rise back up, consolidated move. Okay, so we've had that drop 1, drop 2, rise back up, drop 3. Now, what do we happen at the end of a drop 3? We're looking for some form of W formation to kind of end this here. So we've had to move up, but now what we're looking for is we're looking for the bottom of the second side of this W to potentially play out. And so what we're really thinking is, well, where is an area of interest in which that might be the case? And on the daily, there isn't any vector candle showing. Obviously we had this sharp move back down here, but it was recovered almost immediately. And so we've lost that. But if we drop onto the 12-hour, funnily enough, actually, we do have a vector zone down here, which I think it would be an ideal target for a positive turnaround. So again, this is drop 3, leg 1, up into the W formation. And what I would realistically be looking for is some sort of move back down here into this vector zone, sort of meeting somewhere in and around 52. And what does that tie in with? Well, that's going to tie in with that's not a very good line, the 800 EMA on the 12-hour to try and find some there. And if we could see a bounce from that within this vector zone, an area that I do think could be targeted towards, we can start to see a strong move out there, then maybe it is a reversal. Now, this is a 12-hour chart. We could be talking about the back end of the month before this even ever plays out. And all it is just going to be the start of leg one. But then that may well tie into the fact September starts a little bit bloody, and then it's October that's going to take us into that recovery. So that's certainly a zone that I would be looking at. If I go back to that previous chart I had, not that one, not that one, this one here. Well, lo and behold, that short liquidation zone that we were talking about, if I throw this one on the 12-hour, look at it. That's exactly, that would be taking out all of those, long liquidations. Market maker being able to take out all of those as well, kind of tying in with the, it's be the 236 fib level, maybe it wicks down through into it, and then we start to see that move. So I think there is definitely some chum in the water down there that would attract market makers into driving that down there, whilst also just having that appeal of creating more fear within the market. And who knows, maybe it is the announcement on the 18th that, is the news that they use to move it up or down, however they want to deem it to go. But that's certainly an area that I'm looking at. I forgot which chart I was on. So that's where I'd be looking there. In terms of lower time frames, I mean, let's have it on the hour. So earlier on today, or yesterday when I was preparing for this is what I was drawing up, but it actually played out before we got to the call, and I was just sort of looking at, whether or not there was some sort of rising compression that was happening there. Not the best, I admit, but actually, markets open 2 o'clock, markets open, collapse and straight through. So we ended up just fulfilling that. Now it has almost retraced its way down to the bottom. It says on the 1 hour charts, the breaking of the 20 and the 10 EMAs happen quite often. But what I would say is we are back below the 50 EMA. And although we have seen ourselves break above it, it's always been short-lived. We've been below the 50 EMA for the vast majority of the time, the last 2 weeks or so now. So there we are back down below there. Put it on the 4 hour to kind of see. And again, let's get rid of these now. We just, it's a little bit bigger so we can kind of see where we are. And again, what have we actually seen? So now it's a 50 EMA. It's just battered us down each time. Strong moves, impulses up. Yep, okay, I get it. Back end of last week, going back down. Then we had, well, this was this morning. Look at that for a wick. Now, it actually isn't a stopping vector candle as such because there was no discernible vector that was made from that. So just normal amount of volume there. A hell of a high test through the 50 EMA, but couldn't quite break it. Didn't quite get to the 50% retracement of what is left of this vector candle. But there's still something there. And obviously, it's just turned around. As I say, market's open, strong move down. Strong moves down like this do typically see some sort of retracement. So it wouldn't surprise me if we did start to see maybe when Asia or the back end of that period between the US markets closing and Asia opening, some sort of move back up to 58,500, which is kind of where we're going to be running into, you guessed it, the 10 and the 20 EMA. It'll 50% recover that strong move down for the vector, and then we maybe start to see continuation of that fall back down. But with all of that being said, the last couple of weeks, month or so, the area that we're in right now, it, to be fair, has shown some strength down here. So, maybe we do just see that sort of bouncing around in between here. But that's the battle zone that I kind of see for BTC right now. So that's where I'm at with that. Let me just have a quick drink because I've been talking for ages. No real sentiment change on the poll. Let's just end that there. Thanks for everyone that did it. So the red wins just by a whisper, maybe by 2 votes or so. 55% red, 55% and then 44%. I think it's 56. But anyway, that's where we go. So we shall wait and see. But I think 50-50 coin toss. Right, I only had 2 real questions that were asked me ahead of time. Crypto Wonders was asked on Discord, so ignore what's in there. It was just a reminder for me. And Quilliver? I don't know. Oliver, sorry, you put it in brackets. Thank you. Asking about Tau, so I will touch on that a little bit later on. But Crypto Wonder, I sort of sent a message out a couple of days ago. It was quiet, and I was just talking generally about sentiment within the market. It was quiet in chat. And that generally coincides with bear markets, fearful downtimes, whatever it was. and just wanted to see where people were with it. And to be fair, Crypto Wonder, he was, as he said, very stoic, just trying to squeeze out as much as he can with micro trades. So absolutely fine with that. But he was wanting to understand my take on the psychology of, after every pump, he always assumes that there's going to be some form of pullback. And I suppose the question is that mindset going to trip him up in the future? And he's going to get out after a pump and be left behind. And my view on that is it is very much down to just what your plan is and the timescale that you're working to within that. So I'm going to briefly touch on this in the cuddle in a couple of weeks. It's not the main point of the talk, but as I'm starting to formulate what I'm going to talk about in my head, I think I will end up talking about trading plans, because we've got to appreciate that in the next 12 months, it's highly likely that the bull market is going to be coming to an end. Okay, so we've done 3 years of pain since the last one, and we're getting towards the vinegar strokes, if you will, of where this one's going. And so there's a certain amount of time where you've got to effectively stop being greedy and just decide, am I getting out, or am I just going to ride this up to a point in which I feel very comfortable at getting out? And so from a big picture point of view, I kind of have in my head sometime in the next 12 months, and yes, most people seem to suggest Q4 2025 is going to be the peak of the bull run, and I get that. That kind of ties in with a 4-year cycle. I've talked about it for probably the last 12 months. Are we starting to lean a little bit left, which I will talk about later? But regardless, big picture, next 12 months, I need to get out. So I am going to see some sort of parabolic rise over the next 12 months. And in my mind, then it's a case of, well, I don't want to be being greedy. I don't want to be chasing 5% worth of gains and being out at the wrong time and missing a 300% move. So I personally, as I said at the beginning, I'm looking to just get back in and settle back down. But what you then could say, well, that's my big long-term plan. That's the plan that I've had in the back of my mind for the last couple of years. 2025 end of is going to be when I wanted to get out of the market. So between now and then, anything I can get from it, as long as the risk to reward is there, I'll try and take that. We take it to sort of a more medium-term plan, let's say over the next couple of months, or what we've done over the last couple of months. And I've been of a view that summers aren't particularly great, and so if there's opportunities to take, then I'm going to take them. And since March, I think I've done 5 sidesteps on Tau now, so quite a lot. I've not been sidestepping looking for 5%. I've been looking for 20-30% minimum each time, because I'm not taking out my full pot. But on a smaller time frame, I'm willing to take that risk, and I've always got in the back of my mind, what are my engines to get back in? And part of me has a little bit of comfort of, well, I've had 4 successful ones so far, halfway through a 5th. Let's see how that one plays out. If I don't get it right, as long as I don't wait till like $600 or $500, I should generally be net up. And never let it get that far, trust me. And then it's on a much smaller time frame. So if taking the opportunities I mentioned with Bitcoin and its $2,000 range moves 49 times out of the last 65 days, if you're on a small enough time frame in which you can take that risk, then there are opportunities to make 5-10% every day, which multiplied 47 times is going to add up. So it's very much a case of, where does it sit within in my opinion, where does it sit within your overall plan, both from a long term and a mid term, and are you comfortable enough? And it does sound, Crypto Wonder, like you are comfortable enough to be trading on a smaller time frame, and you're not looking for the massive gains. And as you get down on a smaller time frame, I think that's key. And then I look at seasonality, as we've spent a lot of talking about today. October, I don't want to be just taking a risk on 5%. If there's a big move to be made because October hasn't played out as we thought it's gonna, the market's absolutely dumping, US is banning crypto and China's banned mining, or whatever, some big fundamental news that can take you into a different way, then absolutely fine. But the only thing you've got to have in the back of your mind is you're only chasing 5%. So where is your cutoff point? If you're out of the market and it hasn't gone 5% down, in fact, it's gone 5% back up, are you willing to get back in and lose that 5%? And as long as you're disciplined within that, you trying to trade every dip is not necessarily going to catch you out. All I would say is I wouldn't be risking as we get towards the greed in the market picking back up, altcoins starting to rally, you start to feel that momentum towards the bullish side of things, I'd be ditching any 5% trading opportunities. I just don't think the risk to reward is necessarily there. There will still be pullbacks over the next 12 months. So maybe there is an opportunity to take some money, but I don't think they'll come as often as you would, hope from a greater than 5% return chance is what I mean there. So that's my view on that one. As I said, Oliver, I will answer your Tau one when we get to talking about Tau. Right. Just what I didn't go over it last week, so just very quickly where I sit with my portfolio. So still, a third on the sideline at the moment after selling Tau and DOT and a few others. That's currently where we sit. What is interesting, NIR's still the biggest altcoin that I hold at the moment. DOT is up there. DOT's been pretty disappointing, but as I said, sold 50% of it. We'll see where it goes. Academic, I will show you that in a moment. What is interesting is my CAS now has actually overtaken my Tau. Granted, I sold a lot of my Tau, but the CAS one's still building up. It's going from there. Glimmer, Link, Render, they're small enough that I'm just going to hold them. Link, not a great entry. Render, a really good entry. Same with NIR, a really good entry. So, yeah, they've both fallen, but I have to unstake NIR, so I just haven't bothered. And Render, I've just left it. It is what it is. And the BTC, it's 7% at the moment. Now, we're going to talk about dominance in a minute. That BTC will be sold when there is an alt season to be had. I promise you. But right now, I'm just happy to sit on that. And as we start to look, the business is still 100% BTC. But as we start to look, this is Bitcoin dominance at the moment. And we're getting pretty close now to that 60% kind of level. And for me, there doesn't really seem to be anything that's slowing Bitcoin's dominance down. And so it has been a painful experience for those of us that have been in altcoins. Now, what I would say, two altcoins that bucked the trend over the last 18 months have definitely been CAS and Tau. Tau over the last 6 months, maybe not. But most other altcoins have not fared as well. I think AI ones generally have, but a lot of the other ones have not. And so any altcoin that we've seen has struggled quite a bit. And part of the question I'm kind of asking myself at the moment is, one, what's going to be the turnaround for Bitcoin dominance? And until it does turn around, that 35% of USDT that I've got on the sideline, where's the best place to put it? Is it actually to put it into Bitcoin and just let that one ride until we see the market turn around, altcoins start to take over? And we're not really going to see that, unfortunately, until probably we break this 50 EMA on Bitcoin dominance, because the 21 EMA has held strong. I don't know if it was 20 or 21, has held strong all the way through here. And, it's been best part of, 21 months. No, that's not true. 18 months. And since we've touched the 50. So our alt season, in my opinion, is not really going to commence until we lose this level. And so that doesn't feel like that's going to happen anytime soon. I might be wrong there, but I still feel that Bitcoin dominance has got a way to go. I ate enough humble pie when I didn't think it'd get past 50, then 52. The fact that it's at 58 almost, I feel like 60 is the level. And when you look previously at what's sort of holding it back, that 58 to 60 level is a fairly good indicator of where this can go. And I think maybe it's only a pullback at that stage, but I think we're more likely to see that 58 to 60 band hit and then a pullback than we just pull back here. If we have a look at total 3, that's total 2, total 3. The battleground right now, again, we are battling this is altcoins now. We are battling that 50 EMA kind of area, and it's just been squeezing ourselves through between the 20 and the 50. Now, I didn't draw it on Bitcoin. I have to go back and draw that on the wider one. We do have this bull flag that is forming, of course, but we are still doing higher lows and lower lows and lower highs. So for now, I'm not really there. And what I have had a look at is, so this is total 3, removing USDT, so the biggest stable coin out there, and then divided by BTC, just to try and show sort of, altcoins are struggling. and they have been struggling. And okay, I started DCAing in the end of 2022, but really since middle of 2023, the move should have been into BTC. Hindsight's a great thing, of course it is, but right now this is not giving me any kind of indication that the move into altcoins is particularly the right move. Now, I'm happy because of where I've positioned myself in with some of the altcoins that are generally in the AI market to look back to get into those. But there is an argument that suggests, well, why don't I just actually take the Tau sidestep that I had, move that into BTC, and wait for this to flip? I think my argument in the back of my mind is I already have BTC, so I'm already going to do that. So just take the extra Tau that this sidestep presents itself, sit and wait and see where it goes, but also give me opportunities to get other things that I want to, Ondo, Fetch, probably some more Casper and the like. But yeah, definitely has kind of caught my eye. And again, when you look at the altcoin seasonality, this is Bitcoin season. So I appreciate there's some outliers there. And maybe we're fortunate because some of the tokens that we focused in quite heavily over the last 12 to 18 months have been AI related or Casper. And so they're the ones that have kind of stood the test of time. But if you were just going off this is suggesting that actually Bitcoin's the right next move, and then having a look at BTC pairs for when it's ideal time to flip and take advantage of it that way. So I've got to bear that one in mind. Now, I've seen a couple of questions about vectors, so we'll move on to altcoins and we'll try and pick those up. So just for what you were saying. So if you just go into the indicators, select that there, and then you go Traders Reality. So you can see you got Traders Reality and you got Traders Reality Main. It's actually Traders Reality Main. The Traders Reality one is a legacy one. I don't think that one works anymore, or it keeps on breaking. And as you can see, mine here is TR Main. Now, when you open up the settings, it's pretty confusing, I'll be honest. Okay, there's loads of stuff in here. So I've kind of taken a lot of the noise out. You'll have to just find your own sort of what noise you can take on your screen in terms of how you like that, and to take it to a little bit more of a convoluted kind of things. He uses the 5 and a 13 EMA, while I use the 10 and the 20. So I've got rid of those and I've added 10 and 20 myself just so I can see those. So mine is a little bit different to how it is, but it is very good there. And again, if you go onto the YouTube page and then you click on his, I assume it must be like a web link to a website. There's an hour-long kind of video. It goes through it all, explains it. I think you do have to sign up. It's free. And you just sign up and then you get a link to this video. He goes through how you can set this up. There's a lot of information there because it's just a lot to take in. So that's how you find it. I hope that kind of helps answer that. And then Richard said, further on vector candles, does it have to be a complete movement through the red green zone for the vector candle to have been satisfied, or does it just need to touch the red and green zone? So look, if you where's a good example of it? Had it on, see, there's 12 hour. Yeah. So if you look, if you can just look at this magenta pink color one, let me try and get rid of some of the noise. If I do this, is it going to do it? Nope. Okay, so what you can kind of see is this was an entire vector candle here, body to body. So that's how the vector shaded area would form. But then what you have is you have this candle here, which wasn't a vector candle itself, but you see how much it recovered of it. So that element of that shaded area has disappeared, but it still leaves this bit remaining. So that will still remain open. That's still the target. So to completely close one out, yes, it does. And again, you can see it on the red. So the red vector candle formed after that wick there. Yep, so it didn't get the top bit in. But this candle here and this wick ate up all of the previous. You can imagine when this wasn't here, it's not going to do it for me because it's that. But that red shaded zone would have been that entire area. And then those candles came in. Oops. And then ate into that. So that's how it's done. So the vector zones themselves won't disappear until they have completely eaten into body to body. I just want to check. Let's have a look. That's not the one I wanted. Sorry, I'm just Don't worry about this being a fib level. This is so close to 50%. I'm just intrigued. No. So it went past the 50%. I thought, oh, maybe if it hits the 50%, it auto kills it. But actually, look, 50% was there. And it still nicked just above it, but it kept the top bit. So I thought. So that's fine. That's how it does. That will remain there. So I hope that one clarifies that picture for you. Okay, let's get on to talking about Tau. Let's get everything back on the screen. And let's go from there. So to answer Oliver's question, I am still out of 60% of my Tau position. Am I going to take the remainder out at 280? The answer to that is no. My overall sell position is at 320. So, and I've kept 40% in just in case we're wrong. So for me to then wait for it to get up to 280, one, the picture might be completely different. So to sell there, I'm just not as convinced as such that that's sort of the right move to make, particularly from a risk to reward side of things. Now, what I would say is if we got up to here, this 320 level, and a strong rejection from it, then I might look to sell because I can sell the remainder of my. I wouldn't sell it all anyway. Maybe I sell another 10% or so, because at the level that I originally got out of, the overall narrative hasn't necessarily changed to convince me that it was going to end. But right now, I'm quite happy with the 60% sell level that I took, and then I hedge myself. If I'm wrong, I've still got 40% in, and I can get back in. Again. I mean, we put it on the daily, not the 12-hour, because that's what we did last time. This was tough. This was a tough position for me because I said that's where I'd get back in. But can you just see the noise we had in and around that 200 EMA? I didn't feel that there was a clear move that actually we are going to now go north. And that was uncomfortable to sit through that and try and decide whether or not this was the right move to make, particularly as it was sort of the back end of my holiday. I was trying not to look at the charts too much, but ultimately it was the right move to stay out of it. And yeah, okay, maybe I could have sold the remainder up there, but it's all about balance of risk for me. So I'm still going to be able to make a decent return. Now, where do I think price will go and what do I do? Well, let's have a look at what we've seen. So let's just get rid of this for now. So what have we done? So let's just take everything back to where we originally were. So we had this expanding megaphone pattern, which was showing really good support and resistance all the way up until end of August, okay? But actually what we were really monitoring through this support and resistance band was the 50 EMA. And the 50 EMA on the daily was just battering us down. And dare we ever stick our head above the parapet? And this was just the Binance announcement, if you remember. This was what was keeping us in check, which also then tied in with a nice bit of confluence here with the upper band there, plus the 200 EMA coming in. So I've kind of sort of said, right, well, 50 sometimes gets broken, but it's still pretty strong. The 200 is that Gandalf line for me at the moment. You shall not pass. And thus far, it has not. So what's happened since we've been rejected at the 200 level? Well, we've also lost the 50. We've lost the 10. We've lost the 20. And we're now back within the megaphone pattern. So for me, even on the daily, my target right now would be the recovery of this vector candle zone down there. So you're looking at 220. That's on the daily candle there. Now, that kind of puts you in a bit of no man's land. And it also puts you in a double top complete in itself. And that is the right-hand shoulder of that overall head and shoulders that we've seen here. So that's the left shoulder. There's the head. You get that picture. Now, where can that take us? So this, now we are on the logarithmic. Where could that take us? Potentially, this is where you can get to the sub 100 level and even down here. Now, that's going to be painful. Of course it is. But what else is there on the way? So we've got that 165, 160 level that we saw at the bottom here. We've also got to try and extrapolate out where this could be. Depending on how long it takes to get there, the areas of interest that suddenly become apparent. These vector zones down here, sort of 100 and below. Now, I'm not saying it's going to happen to get down there. And this is why you kind of have to make your plans written in pencil and just see how the price actually moves. But these are areas that I want to see what price does when it gets to them. And that is just how I'm going to do it. And should price start to head back down, the 50 is going to dip below the support level, sorry, the resistance level of this upper level, which is going to be even stronger. So I've just got to bear that one in mind as well. But they would be, honestly, two levels I'm looking at. First one's probably going to be 220. See if we can get down to there. And then I would say this level here as well, just because we've had that. And this would all time with where Bitcoin was and that W pattern. Maybe that's what we see, and Tau follows the rest of it through. But if we can't hold that, then I got to look to the bottom of this, because it hits it so often. For the last 6 months, it's kept on hitting it. So why would it stop now? And that's not a pretty place to be if you've bought Bitcoin at 600, sorry, Bitcoin Tau at 600 and you've held it. But if you manage to sidestep some of it and you've got an opportunity to do that, then there is. And it goes again to that picture of, well, even if Bitcoin does recover, altcoins are still likely to bleed against Bitcoin, or certainly bleed anyway. So, we could see a recovery in Bitcoin and ultimately still starting to drive this down. And unfortunately for Tau, it hasn't seen the recovery that other altcoins in the same sector, AI sector, have done, near, render, and the like. And so, maybe this just was overhyped at the beginning. I love the project. Don't get me wrong. I'm not trying to say I'm just looking at it from where is the price. But there is a lot of sell pressure. We talked about that, or Simon talked about that in the trading pub with the validators and the subnets and all that kind of stuff. So there is some sell pressure there, which is, I want to say, organic. It's been driven by the validators, which isn't helping the price right now. And then just with where sentiment is at the moment, where are people buying this? And I appreciate there is a grayscale fund, so we've got to always keep that in the back of our minds as well. But that doesn't stop these targets from being valid. From a market maker point of view, in terms of principles of where we could look to go, they would be the ones I'd looked at. And that sounds horrible to look down there, but we start losing this, building below here, instead of just wicking down. I don't see why this wouldn't be. And obviously, the longer it takes to get there, the lower this ultimately goes. And I'd hate to see a full recovery down to that 30, 40 cents. But, that's where the head and shoulders, if it were to play out, worst case, would take us before the pattern was complete. At 70. I think, these zones here would be the ones I looked at first. So I hope that kind of helps. Not exactly the best picture. I appreciate looking at DOT. Incredibly ugly. Ugly. And, I was worried, when I sold, it was down here before we'd had this drop down, went on holiday, 2 bites of cherry. I thought, oh, do I need to buy back in here? But no. And this is just looking like a classic M formation, double top. We've already broken the neckline. Guess where? Looking to retest 363. 363, by the way, is the lowest level I managed to buy in of DOT down here. So I've just basically round tripped quite a bit of it. Obviously, I've been able to make over the last year, that'll be 18-20%. So there's some benefit from that, but still in that position where I've sold 50%. I'd look to get back in of that 50%, another 50%, so 25 of my overall position. The remaining 25 I'm going to put into things that I think will move better. It could be the Bitcoin play, and then we just go into DOT. I love DOT. I think it's got some great things, but for whatever reason, the market ain't loving it. It's struggling with its price right now. So, it's that saying, don't marry your bags. And I did get out. The only reason I didn't sell more in this one is because that was all I could sell. The remainder is still in that 28-day lockup period. So, who knows what could happen in 28 days' time. CAS on some lower time frames, not looking great. Let's just try and take it down. I don't know, so 4 hour maybe. I mean, we're ranging out sideways. So we have just gone and lost on the 4 hour, this 800 EMA. We've lost it. We're looking to backtest, retest it. And then maybe we have that move back down. What I would say, and I've said this a few times there, when you're looking to try and decide what you want to buy when markets dump, look how quickly they recover. Look at tokens that recover well. And Casper is definitely one of those. So any drop down there, maybe these vector zones, we haven't even talked about, Fibonacci levels. I mean, those work within this zone here, but you can see we've lost the 382. This is the next battle zone at, let's call it 15 cents. And then it's a retracement back down. But if you can get anywhere between 15 and 14, I'm thinking you're laughing. Obviously, we might round trip it all the way back down to 10. I don't know where this sits with trap fives and all of that kind of stuff. You'll have to wait to Thursday to ask that question. But, strong dumps in Casper have been well bought up. So, if you're looking for a token that has memeability, has a community that seems to buy it, then this may be the one. And if you can take advantage of price drops, maybe that is one of the ones you can ultimately have a look at. The rest of the markets are just generally, again, all not looking great. We've had moves down, recoveries, generally 50% recoveries before continuations of the moves back down, which is just emphasizing the Bitcoin dominance that we've been seeing. Near and render, again, near, maybe I should have got out then, but I think it's a 2 or 3 day unlock. So no real opportunity whilst I was on holiday to do that. The move down. My average near price, I haven't checked the staking, but it was very close to $1 anyway. So we're getting there. And render, again, I suppose right now we've still got 445. But, this looks like a foregone conclusion. This vector zone, or this confluence of vector zones down here, just to collect those. And then it's what's it do around this noise before it bounces back up. So, or if it bounces back up. But that's kind of where I'd be looking. A lot of the other ones are very similar in terms of where it's potentially positioned. So I don't think there's too much for me really to go into there. I have started to just put BTC pairs on my main portfolio at the moment, just so I can kind of have a look at option. But Dot, not looking great. Limmer, not looking great. Casper does look good. Tau was looking good, but not so much now. Remember, this is only dating back to when Binance listed, so I can't really get any information before then on a BTC pair. Link, near, not as bad as others, but still not great. Render, again, not as bad as others, but recently, what's happened there? No idea. Not great. You can kind of get the picture. A lot of these not looking particularly strong for the BTC pair. So, there's a lot of decisions that kind of need to be made with wherever I want to go. But as I say, with having some BTC in my back pocket already, whatever I do decide to put in, if I can find some clean turnaround point for this to happen, I'm not sure how that's going to manifest itself at the moment. Mainly through looking at Bitcoin dominance and probably total 3 minus USD divided by BTC. To try and give me some sort of narrative of when we think alt season's kicking off again. That's when I'll look to convert and try and utilize that BTC I already had. And some of that BTC, look, some of that BTC was bought at a higher price than what I'm at the moment. So don't think that this is BTC of 15K. That's my business BTC. This is a personal one, which, I had a good amount, which I sold at 50K back in October or November. And this is what I've been rebuying back in between 50 and 65K. But that's where I'm looking. Right, I think that's probably enough. It's an hour and 20, and I've probably bored the life out of the majority of you. I will give anyone an opportunity for any final comments or questions that you may have. But if you don't have any, all I will say is Thursday, we've got the trading pub. I think Simon mentioned that they've got one of the validators from the bit ads. So I have no idea what that conversation is going to be about, but it should be quite interesting. We do have the cuddle on the 21st of September down in Boston. So book your tickets for that. I'm definitely there. I'm staying the night as well. So it'll be good to catch up with everyone outside of it. I don't want to say what I'm talking about just yet in case I change my mind, but hopefully interesting couple of conversations for you there. And all that really is left for me to say is enjoy the rest of your evening, enjoy the rest of your week. See you all on Thursday. If you have any questions between now and then, don't be afraid to hit me up. I will try and answer them and get round to them as quickly as I can. I'll catch you all later. Cheers now.